The International Accounting Guidance of ASC 606 and IFRS 15 regulate how revenue is recognized for contracts with customers. At its simplest, when you sell a service or product, you recognize revenue at the point in time when it's delivered, or evenly over the duration of the contract. But business and contracts aren't that simple. For example, a SaaS business may bundle a subscription service with other products and services, such as support, training, and even hardware over the duration of a contract. And they may offer a discount as part of the sale. This makes revenue recognition much more complex. The ASC 606 and IFRS 15 revenue recognition standards include a 5-step process. Let's look at each step and how the Softrax Revenue Management System, or RMS, helps you comply with these regulations without the need for manual processes, spreadsheets, and workarounds. Step 1. Identify the contract with the customer. In Softrax RMS, you can easily and automatically import data from your contracts directly from your ERP, CRM, CPQ, or any source system without the need for customizations. Your contract outlines the payment terms and how your business will transfer the goods or services to the customer. These form the basis of your billing and revenue recognition structure. For example, Corporate Wellness, a B2B wellness company, enters a 1-year contract to offer virtual corporate fitness and well-being services to its customers' employees. The employer pays a subscription fee for each employee. Step 2. Identify the performance obligations in the contract. Before you can recognize any revenue, you must identify each distinct good or service that you made to your customer in your contract. These are known as performance obligations. The Softrax RMS imports line item data from your source systems and creates the appropriate performance obligations, also known as revenue items in RMS. You configure policies or rules for different types of contracts, customers, or products. These policies determine how revenue should be recognized and which general ledger accounts are impacted. You only have to set up your policies once. And then, the powerful and proprietary policy engine in RMS automatically creates revenue forecasts and assigns accounts based on your rules. For example, the Corporate Wellness contracts includes 4 performance obligations. Each of these performance obligations may need a different schedule for revenue recognition and method. For example, Corporate Wellness recognizes the amount from pedometer devices in total on the date when they are delivered to the customer, but they recognize the amount for the app each month over the duration of the contract, and the amount from fitness classes based on usage. Some items may in fact represent multiple performance obligations and may need to be unbundled into multiple items for revenue recognition purposes. For example, support services are unbundled into account management and end-user support services and recognized over the duration of the contract. Step 3. Determine the transaction price. You must next determine what is the transaction price of each performance obligation. A customer may pay a set amount for a bundle of products, or they may pay a variable amount based on usage or even both. In addition, if a contract includes variable consideration in the form of discounts or incentives, you need to estimate the amount of variable consideration that you're entitled to. For example, Corporate Wellness bundles several products and services in its one subscription fee. Each product and service within the bundle has its own value. Step 4. Allocate the transaction price to performance obligations. With Softrax RMS, you configure how to calculate the standalone selling price, or SSP, for each of your revenue items with price books. And then, with our fully automated policies, you configure how allocations are performed for different products, customers, and contracts. You can allocate revenue across a group of performance obligations using different methods, such as relative, residual, or multi-step. You can even exclude some performance obligations from being allocated. Over time, you can manage contract changes with the RMS automated contract combination and modification policies. These enable you to perform prospective and retrospective reallocations of revenue, as well as cumulative catch-ups or downs for any non-distinct performance obligations. Step 5. Recognize revenue when or as each performance obligation is satisfied. With Softtrack's RMS, you configure your policies once and let automation and your revenue recognition rules perform the calculations for you. You can review your revenue activity and run reports to track your recognized and forecasted or deferred revenue. Softtrack's RMS simplifies your end-of-month activities. When you generate journal entries, amounts are moved to and from your configured accounts. You can then import the RMS journal entries into your revenue recognition journal. Because Softtrack's RMS is linked to and imports your transactional data, you can always adjust and recalculate your revenue forecasts as needed. You can pause and resume forecasts, apply percentages of completion, usage, or milestones to revenue items. Or you can cancel forecasts and manually apply carves and perform allocations for any exceptional situations. Are you ready to explore how you can use Softtrack's RMS for your billing and revenue recognition? Contact us at sales@softtracks.com to schedule a 30-minute consultation.